Welcome to today's Explainer. Look, if you're a business leader trying to navigate today's landscape, you already know the entire world is watching exactly one thing right now: AI. The US stock market? It's hitting record highs again. The Nasdaq and the S&P 500 are literally breaking historic levels. Everywhere we look, AI has become the undisputed center of global attention. But as leaders, we've got to look way past those glowing headlines. So I want to pose this question directly to you, and I challenge you to look at the market without any of the usual emotional bias. Are we witnessing the future being built in real time, or are we watching another massive financial bubble forming right in front of us? Because what's happening on Wall Street today is going to shape the global economy for years to come. Sure, the stock market can create incredible opportunities, but it also comes with some serious risks. We've absolutely got to separate the noise from true long-term value. Okay, let's dive into this. Here's our roadmap for cutting through that noise. First, we'll look at the AI market boom. Second, echoes of the dot-com bubble. Third, identifying emotional market bias. And finally, vetting AI investment value. All right, Section 1, the AI market boom, unprecedented growth on Wall Street. Right now, investors are just pouring billions of dollars into AI companies. Tech stocks are absolutely exploding in value. We're seeing everyday people suddenly laser-focused on companies they hadn't even heard of, maybe 2 years ago? It's wild. Every single time there's a new AI product drop, a fresh earnings report, or even just a quick speech from a tech CEO, boom, billions of dollars are added to the market almost instantly. It's a truly staggering scale of capital deployment. But to be completely fair here, this massive influx of money isn't just based on thin air. AI is already actively reshaping our core industries way faster than most people expected. We're talking hospitals, banks, schools, businesses, creators, and even governments. They're all starting to rely on it. Everything's moving faster, and everything's getting smarter. Think about it. 10 years ago, most folks totally underestimated how much tech companies would end up dominating the world. Now, investors believe AI is that next massive transformation. But, that brings us to a pretty crucial complication. Investors believe AI is that next massive transformation. But, that brings us to a pretty crucial complication. Which leads into Section 2, echoes of the dot-com bubble, when hype moves faster than reality. Now, what's really interesting about this slide is how clearly history shows us the danger of moving faster than reality. Let's look back at the early 2000s for a second. The internet created one of the biggest investment frenzies in history. In year one, the frenzy kicked off because people genuinely believed every single internet company was the future. By year two, money was flooding the market and prices were just exploding overnight. But then, year three, the bubble burst. Heavily hyped companies like Pets.com and Webvan completely collapsed and wiped out millions of investors because, simply put, the hype vastly outpaced the actual business fundamentals. So let's draw a direct line between these two eras. In the early 2000s, this absolute belief that the internet was the future drove those overnight price explosions. Fast forward to today, and we're seeing the exact same fervent belief driving the AI market. Billions are being added instantly based on relatively minor announcements. Yes, the underlying technology is totally different, but the volatile market behavior, it's alarmingly similar. It really begs the question, could history be repeating itself? Moving on to Section 3, identifying emotional market bias. Fear, greed, and retail frenzy. Right now, the market is being heavily influenced by non-fundamental drivers. We are talking about pure market hype, incredible excitement, the fear of missing out, or FOMO, and, yeah, let's be honest, greed. Everyday retail investors are flooding platforms like YouTube, Reddit, and Twitter, and this is creating entirely unsustainable growth that's based almost purely on emotion rather than actual financial data. People are moving way too fast, and they're betting really heavily on internet chatter. And everywhere you go online right now, people are asking this exact same question. Who's going to be the next NVIDIA? This perfectly illustrates the extreme focus on quick, massive gains rather than looking at long-term, sustainable business fundamentals. When the broader market becomes completely obsessed with finding the next lottery ticket, well, emotional bias has basically taken over the steering wheel. And this brilliantly illustrates the stark difference between amateur emotional reactions and the rational approach of experienced leaders. Hype-driven investors are blindly following trends, they're reacting instantly to CEO speeches, and relying on viral online talk. In stark contrast, data-driven leaders, they're studying the hard data. They're rigorously analyzing actual earnings and deeply understanding the core business function. That is exactly how you separate the signal from the noise.
Which brings us to Section 4, Vetting AI Investment Value, separating hype from true long-term value.
I really want you to internalize this next truth. Going viral online and building a strong long-term business are two completely different things. The reality is, no stock goes up forever. A company can completely dominate the headlines today and totally struggle tomorrow. Blindly following these trends without doing the fundamental work, that can become extremely risky. So the crucial point is you need a structured framework to protect yourself. Step 1, build real knowledge of what the company actually does, looking way beyond all those AI buzzwords. Step 2, study the hard data and meticulously analyze company earnings. Step 3, understand exactly why investors believe in the company. Ask yourself, is it grounded in fundamental value or is it just a viral narrative? And step 4, assess the specific risks involved before committing a single dollar. You absolutely must maintain an emotionally detached, highly disciplined approach to evaluating any new AI opportunity. As we wrap up today's explainer, I want to leave you with this powerful final thought. A decade ago, companies that looked pretty ordinary became trillion-dollar giants. And AI? It could very well completely reshape our world over the next 10 years. But as history plainly shows us, not every exciting trend is a guaranteed success story. So what do you think? Will this market rally be remembered as the true beginning of a technological revolution or one of the biggest market bubbles in history? Stay curious, stay informed, and always make your decisions based on solid knowledge, not fleeting emotions. Thanks for joining me, and I'll catch you in the next explainer.